Now, a lot of analysts think that there is over a 70% chance of a recession in 2024. So in today's video, we are diving in and we are looking at the top 3 things you must do during a recession to make as much money as possible. So I hope you guys all enjoyed this video. My name is Carter and we talk about everything money on this channel: stocks, money management, trading, investing, credit cards. So subscribe, join the team, and if you guys want to learn more about swing trading, I just released a brand new swing trading course and we talk about how to find stocks, my strategy, my mindset, the psychology of a trader. I'll put that down below so you guys can check it out, and you guys can use code YouTube to get 20% off. So make sure you check that out. Link in the description. Click it right now. All right, let's dive into this. I hope you guys enjoy it. All right, so like I said, a whole bunch of analysts are stating that there is a 70% chance of a recession in 2024. So I think it's always smart to go into the new year with some sort of game plan or strategy if there is a crash or a recession or even a stock market reset. The first thing that you need to do during a stock market crash is continue to invest in indexes. Now, looking at like the S&P 500, which is probably one of those popular stock market indexes, looking back, you guys will see we've had fantastic growth. And on average, through all the ups, through all the downs, the Great Depression, the dot-com bubble, the 2008 crash, the 2020 crash, the S&P 500 has had an average return rate of about 10%, meaning if you guys just sit back, relax, and just continue to invest, you're going to be in a great spot. On top of that, what you're doing is buying in on all of those dips. So when the stock market recovers, your average cost is going to be lower and you're going to make more money. Now, the great thing about investing in like the S&P 500 is you're going to be super diversified into over the top 500 companies in the United States. The great thing about this is you get great growth and you guys will get dividends to compound on yourself, which is a great way to get more passive income, cash flow, and growth. And with that being said, a whole bunch of professional hedge funds and traders can't even beat the S&P 500. Over 86% of hedge funds can't even beat the S&P. So guys, just invest in the S&P and just sit back and relax. All right, moving on to the second thing you must do during a stock market crash. Before we jump into that, hit that like button and subscribe. Do it right now. All right, the second thing you must do during stock market crashes is buy dips. Now, buying dips on fantastic blue chip companies are an easy way to get a ton of growth. Looking at companies like Google, in 2008, Google sold off about 55%. And during this time, everybody was saying, oh, don't invest into Google, don't buy Google, it's going to zero, it's going to zero. But in 2009, Google had a return of over 101%. And Google is not the only one. Most companies, most blue chip companies that recover from a crash are going to easily outperform the indexes. Another one here is Apple. Looking at Apple, in 2008, it sold off 56%. But then soon in 2009, it was up over 146%. Meaning if you're buying those dips, you're going to have a fantastic growth that following year when the stock market recovers. Buying dips are an easy way to just get on a fast track for investing because you're buying the lows. We always hear that common expression of buying low, selling high. A lot of people think that during recessions or crashes, you have to sell your shares. No, that's the worst thing you guys can do. It's always smart to buy more and then sell at all-time highs. That's what I would recommend doing. And investing into blue chip companies like Apple, Microsoft, Amazon, Google, all these fantastic companies that are still doing really well on their revenue, cash flow, all that stuff, and they just sold off just because the market sells off, that represents a great opportunity to buy those stocks at a super affordable price. And like I said, Apple sold off 56%, so you're buying Apple stock at a 56% discount. All right, the third and final thing you must do during a stock market crash or reset is focus on dividend stocks. Now, the reason why I say this is historically, dividend stocks don't fall as much compared to the general stock market. Now, the reason why this is because people are less likely to sell their shares of companies that's paying them cash flow than companies that aren't. This is why you will see companies like Tesla, Google, AMD, Nvidia, during stock market crashes, those stocks will easily sell off 40, 50%. And companies like Johnson & Johnson, Apple may only sell off 25 or 30% just because those dividends, and those are more value picks rather than growth picks. Growth stocks are historically a little more volatile, a little more risky, and during stock market crashes, a lot of people love to focus on value companies, so they will sell their growth stocks and focus on more value opportunities and companies that are paying dividends. And on top of that, dividends are great because you're going to be developing cash flow and passive income that you guys can use to compound your account and grow it larger, because yes, these dividend stocks will sell off a little bit, so you're going to be buying those dips and you're going to be generating a lot more cash flow, which is a great way to get a whole bunch of passive income, growth, and just a ton of opportunity in the market. So guys, this is the top 3 things you need to do during a stock market crash. I hope you guys all enjoyed it. If you guys did, hit that like button, subscribe, and we'll see you guys tomorrow in the next one.